Okay, it's taking a bit of time, but we'll begin in just a few seconds. Okay, there we go. So yeah, so we are now live on Facebook. And then I need to record this. Oh, okay, you've all gotten the passcode. So I need to record this so that we can share with those who may not be available. Yeah, so yeah, thank you everyone for joining us. And yeah, we are happy to have you here tonight. It's actually mid-month. And my name is Felista Wangare. I'm the community leader at Facebook, the 52-Week Savings Challenge Kenya personal finance group on Facebook, where we talk about saving money, investing, personal finance dilemmas, and everything in between. Anything money related, yeah, we talk about it. I usually get people saying, why do you, oh, this is not about saving, but as long as it touches on money, it touches on your personal finances or entrepreneurship or investment, we are going to talk about it in 52 weeks because money is a holistic topic. You can't just say, I'm just saving and ignoring everything else. Money is a holistic topic. And so that's why we discuss lots of things in 52 weeks that pertain to money. So today we are joined by Wakamiru. He's using his government name there today. So those of you who have been wondering, yeah, so Wakamiru is still part of his name, but yeah, so today he's going by Daniel Kimita, which is the name that CID, they call themselves DCI now, would use if they were looking for him. Yeah, so it's the same person. Don't wonder who is this masquerader pretending to be Wakamiru. It's actually him. He's called Daniel Kimita, and he's here today. You may have seen his posts in the group talking about investing in Treasury Bonds. And if you haven't seen them, but you want to learn more today, or you've seen them and you're like, this doesn't make sense, I have to see it in video form, I have to hear someone talking, I don't like reading, that's also okay. So he's here for you today, and he'll be able to talk about investing in bonds. So feel free to post your questions and comments and your experiences about investing in bonds in the chat. And Wakamiru is right here to answer them. I'm hoping we'll be able to cover most of the things before it's too late. But if not, we can do a part 2. But yeah, but we'll be able to cover at least most of the basics. And then if there are some advanced things that go after that, that come up after that, we can plan for a part 2 so that you can feel confident in investing in bonds. So as we start, feel free to type in the chat about whether you have invested in bonds before and what your experience was, and what your expectations for this session are in terms of the questions you have. And yeah, and then as we go along, feel free to type your questions, feel free to raise your hands, and Wakamiru will be happy to answer you. So karibu sana, Daniel or Wakamiru, and we are happy to have you. Let's go for it so that I don't take too much time in the introduction. Karibuni.
Thank you for being here. Hello, everyone else, and welcome to our session on the 52 Savings Challenge. Where we be talking about investment, especially bonds. My name is Wakamiru. The government name is Daniel Kimita, as Felista has said. If anyone is in need of me, tell them to look for Daniel Kimita. Wakamiru is a family name which I'm carrying on, building a legacy on it. So I'm a bond investor. Felista was wondering whether to call me a guru or an expert, but today we are looking at
Wakamiru.
bonds. Yes.
Sound.
Oh, sound. You can hear me.
Yes, people are saying they are struggling to hear you.
Okay. So, okay, I don't know whether I'm audible enough now.
Betty, is that better? Or anyone? Oh, it's good. Yeah, it's
Okay.
perfect. Thanks.
So as I was saying, I'm a bond investor. Felista, you were wondering whether to call me Gulu or an expert.
No, I actually call you a bonds guru, bonds expert, because you are our 52 weeks go-to person for people needing to learn about bonds. Okay. But you humbly requested to be addressed as just a bonds investor, which is perfectly fine. But to us, you're our bonds guru.
Okay. So I also comment on issues around the economy. I also comment on matters finance and related subjects. So around the money, and I'm happy to be here facilitating this session. And it is my hope that by the end of this session, we'll have been able to demystify or make easy the topic on bond. There are so many issues that play people that don't understand. So it is my hope that we'll be able to demystify that. On many occasions, when I make a post or a comment somewhere about a prospectus on the results of a bond, we find so many questions, people asking, how do I go in? How do I apply for funds? We also have issues around people paying on the issue of payment, paying for the allocated bonds. We're also having people with so many questions on, do I hold my bond up to maturity or is there a way out? We also have concerns about the default risk of if the government can default. And these are the issues that we'll be talking about. We are doing this session on a belief where I have on a belief system of we can have more people financially included if we are able to collect information that is in a language that is easy to be that people can understand. So let's dig in. There's a presentation I've prepared here for all of us, and I hope we have a good time. We learn together. So here we are, and we are talking about investing in government securities, presented by myself, Wakamiru, and something little about me, Daniel Kemita Wakamiru. I comment on economy, financial, and money markets. I have some 80 experience in the finance field. I have worked as an accountant for quite some time. Graduated from college with Bachelor of Science in Entrepreneurship. I also took my certified public accountant course as a part-time course when I was in college. About me continue. There will be no talking about me without the early age influence on saving and investment. Right when I'm young, around 6-7 years, my own mom is in table banking group. And every time they are coming home from the table banking group, she is making sure that I'm seeing the saving and loans book. And the kind of talk we are having with her is looking to the future, like her share. The share is 1,000 shillings. Her share is going to how much? The loan she is taking, what purpose was it? So there will be no talking about saving and investment without talking about the early age influence. And for the parents here, I hope we bring in our kids to the bank. I hope we take our kids to these meetings where we are talking about investment. It goes a long way. I was among the first cohorts in the NSE Investment Challenge, which started in 2012. And we were just trading shares and bonds. We will get some amount of money that was 3 million in a virtual account, and you trade. We formed a chama or an investment club later with the former classmates who we participated in the NSE Investment Challenge. And this was now where the real thing starts. Along the way, when the realities of life, when people have started going to other areas to work, we liquidate our investments and everybody goes solo. And we are here today. So let's talk about government securities or treasury securities. It is that the collective name for the Treasury Bills and Bonds. when you hear government securities or treasury bills, treasury securities, just know we are talking about treasury bills and bonds. And earlier on, we used to give bond certificates. When you lend the government money, they would issue you with a paper certificate. This is where now the issue of a bond came from. And basically, they are debt instruments. You're giving the central bank money, and they're also paying you for using your money to develop the economy and other sort of paying for government expenditures. So let's look at treasury bills. And one of the questions we have been always asked is, what's the difference between treasury bills and treasury bonds? So treasury bills, in short, they are short forms of investment. The treasury bonds you're committing, they are long-term. You're committing your money for a longer period. For treasury bills, we are talking about committing your fund for 3 months, 6 months, or 12 months. For treasury bonds, we are talking about anything between 1 to 30 years. That's you commit your funds for longer. And the other difference is you'll earn more in terms of returns from treasury bonds than you would earn from treasury bills due to what we have already said, the commitment of funds. How long are you committing your funds? The treasury bills, which I've said, there's the short form. The minimum investable amount you can put in is 100,000. The bills attract a small rate of return. I've already said that you're committing your funds for a shorter period. And bills are issued at a discount. Just, I have done some calculation there to say, if, for example, you are to invest, the face value of your bond is 100,000. Well, after the auction, we will agree on what the interest rate is, and this will be used to calculate your return, and you will pay less your return. On the example here on the screen, we have you are paying 98,303 shillings and receiving back 100 now, which is the face value. And this is a bond which is a 91 days. You will earn 1696 in terms of interest. And people ask me, is it worth it? You're earning 1,696 after 3 months committing your funds with that treasury bill. And this is the best explanation that we can give. What is the alternative? If this money was put in a fixed deposit earning account, interest earning account, how much would it give? We are talking about people not giving the banks their money to be lying idle in accounts. Well, yes, they can earn something out of their money. So next we'll have a historical data for a treasury bill. We'll be giving links where you can get this data. And the interest rates on bills and bonds, now here we are talking about bills, will fluctuate in regards to as the money market condition and the financial markets condition. Now, the issue of inflation, the issue of interest rates, the issue of liquidity of money, this will influence the interest that you can earn from either a bill or a bond. I've given here an example of treasury bills whose tenure is 91 days for a couple of weeks. The treasury bills are available every week, and we can see at the beginning, that is 25th of April, one would have earned 7.448%. Whereas by 27th of June, one would earn 8.013%. So it is also a question of timing. You would have to know when to go in so that you can earn more returns. But as I was already said, if the inflation rates are high, investors will be asking for more return on their investments. So here is a sample calculation of T-bills interest rates. And this calculator is available on the CBK website. So I'll be sharing the link to that, where you can calculate and be able to tell how much you will earn. So what you are supposed to input in the calculator is the face value, the amount you want to invest. We have said the minimum is 100,000. Any additional amount is in multiples of 50,000. Then you will have to say whether the bill is with the tax or it is with no tax. Treasury bills are taxed at a rate of 15%. Then you will enter the rate, which this is only a guide. You can use, if you want to calculate a figure, use the last auction results to be able as only a guide. Then you'll choose the days you are committing your fund, and then you'll calculate. Everything else will be calculated by this calculator. You can find that calculator in the CBK website. We'll move on to Treasury bonds. These are just giving a brief introduction to Treasury bills so that people can be able to differentiate Treasury bonds and Treasury bills. No, Treasury bills short-term, Treasury bonds long-term. And we are saying they range from medium to long-term, ranging from 1 year to 30 years, your investment. And now you're committing your funds for a longer period. And the rate of return tends to be lucrative if you compare with Treasury bills. So interest payment for Treasury bonds. We have seen Treasury bills giving interest. You are getting maybe at the start, you are paying less and receiving more at the end. But for Treasury bonds, you are lending the government money. They're using your money for development purpose and paying their bills. And then the government will be paying you interest every 6 months at an agreed annual rate. So we'll agree the annual rate is 12% at the auction. So you'll earn 12% on your investment per annum. Though whatever you're supposed to earn per annum will be split into two, where you'll be earning half of it every 6 months will be sent to your bank account. We have already said the interest rate is alive through an auction. And I hear people asking, what auction? The ordinary auction that you know that is what happens. And I like saying it is a haggling, though it is an advanced market haggling where individual investors, when they are applying, they are asking for their rate of return, their desired rate of return. After the auction committee, a function of the central bank, meets and they are able to arrive at cut-off points and average interest rates, and they agree what to take and what not to take. So the interest rate is like after that auction. We'll be looking at the auction process in subsequent sheets. So let's talk about the different forms of bonds. In Kenya, Treasury bonds are fixed. In advanced economy, you go to America, we have floating bonds. We have bonds where interest rates are changed. Though here in our country, the bonds which are currently being issued, they are fixed rate. Meaning if we agree on the interest rate that we determine at the auction, that is locked for the entire lifetime of the bond. Though we can categorize our bonds into two categories, where we have fixed coupon rate bonds, which are taxed, and we have infrastructure bonds. So there's that question on the difference between the ordinary bonds and infrastructure bonds. And the fixed coupon rate bonds, they are taxed. The infrastructure bonds, they are tax exempt. For the fixed coupon rate bonds, you have a bond which is less than 10 years. The tenure of the bond is less than 10 years. The tax rate will be at 15%. For a bond with more than 10 years, the tax rate is at 10% on the interest. The fixed coupon rate bond, the minimum investable amount there is 50,000 shillings. Any additional amount, it is in multiples of 50,000. Then let's talk about infrastructure bonds. These are tax exempt. The government is borrowing money to do some infrastructure projects. So they tend to give an incentive, and the incentive is they are tax free. the minimum investable amount is 100,000. That is in the infrastructure bond. So whoever was asking about the difference between the ordinary bonds and the infrastructure bonds is number one, the tax-free element, and also the minimum investable amount. For ordinary bonds, we have already said that should be 50, and for infrastructure bonds, that should be 100,000. So let's talk about, where do you get bonds? Where do you purchase them? How do you apply? Where should you go for them? And the bond markets can be categorized into two. That is the primary market and the secondary market. Basically, in short, we are saying the primary market, this is where you're going direct to CBK in the they issue their bonds. So it is the issuer who is the CBK and you, the investor. That's the primary market. For the secondary market, this is where now me and you meet at the Nairobi Securities Exchange and through our brokers, and we exchange our bonds. This is the secondary market. So you can get bonds from CBK direct, and also you can get bonds from the Nairobi Securities Exchange. For most people, let's clarify this. They don't know the Nairobi Securities Exchange. It is lightly called so the Securities Exchange because there are three categories of securities that are being traded in this market. We have our ordinary shares, we have bonds, and we have derivatives. So there are three counters in that market, and that is why it is called a securities exchange, because not only shares, we have bonds and derivatives that are being traded there. So for someone who wants to invest in bonds at the moment and the CBK doesn't have good offers, you can actually opt to get a good bond. We'll be talking what a good bond features in later. But you can actually go to the secondary market, that is the NSE, and get a bond there. Now this is through a stocks broker or the agent, your agent. Let's talk about the primary markets. Here are the issuers we have already said, the CBK, and they always have bonds every month. Glad that these days we have bonds. We can have three types of bonds at one time in 3 months. Now you have a variety to choose from. We had a tap sale of an infrastructure bond, and we had one tap sale of a fixed coupon rate bond, and we had the open bond in a single month. So you have a variety to choose from. Several bonds being issued by CBK. So you buy bonds in the primary market, you're buying bonds directly from the CBK. Also, you can purchase the bonds from the primary market through licensed placing agents. These are banks, stock brokers, investment advisors. They will not be buying the bond from the secondary market, but they are just placing agents who will help you to apply for bonds. They earn a commission from CBK or the bonds that they help investors apply. So for you to be able to deal with the CBK, you need to have opened a CDS account with the CBK. The CDS account you're opening with CBK will help you participate in the primary market. Let's start thinking that the CDS account we are talking about here is opened with the CBK. We'll be talking about this CDS account and the other CDS account you use for shares. We'll be giving the difference in subsequent sections so that people can understand. The secondary market, we have already talked about it. And so you bought your bonds from the primary market, you got your bonds from the issuer at the CBK, and you want to sell it, you want to change ownership. You can actually talk with your investment broker to help you sell that bond in the secondary market. And where they are sellers, they're also buyers. So basically, and actually our board counter in the NSE is a very active counter. So in subsequent sections, we'll be explaining this so that people are able to understand how to go about the secondary market. So For transaction in the secondary market, you will need the CDS account to be able to transact in the secondary market. Now here the difference comes in. When we went to CBK to purchase bonds in the primary market, we are using the CDS account opened in the CBK. When we go sell the bonds in the secondary market, we are using the CDS account. To open a CDS account, contact your preferred security broker or investment banker for that matter. They help in those issues to be able to help you open that account. Now here we have to give the difference between the CBK CDS account and the CDS account. One we are opening with the central bank. The other one we are opening with the Central Depository Settlement Corporation, that is CDSC. And your accounts, which you're opening with the CDSC, you open it through a stockbroker or an investment banker. They are all listed as agents, so they can be able to help you to open a CDSC account. But for primary market, you go direct to CBK and open the CDS account there. So most people have the CDS account, which is used to trade shares, derivative or bonds in the secondary market. The CBK CDS account is basically for the primary market transaction. Every other time we are talking about CBK CDS account, CDSC CDS account, you will find someone ask, what is a CDS account in the first place? I had begun the session by saying, earlier on, we were giving paper certificates. If someone lend the government money or a corporation money, which is seeking debt, they are being issued with a paper certificate. But today, that is not happening. Today, everything is on an electronic platform. So your CDS account, take it as an electronic settlement, an electronic ledger, where your ownership of the bonds is registered. So when you purchase a bond from CBK, you won't be issued with a paper document to show you that you have given them your money. Everything will be done on an electronic ledger where they show the ownership. So when we have gone to the secondary market, when a bond changes hands or a derivative or a share, everything is on an electronic ledger. And this is where the CDS account comes in. It is a central depository system that is a CDS account. That is the full name. We have talked about the primary market, where we are getting bonds directly from the CBK, the Central Bank of Kenya. And at the primary market, you can get three kinds of bonds. Number one, they are new bond issues. Secondly, they are bond reopening. Thirdly, there is a tap sale, and we'll be talking in details about that. So the new bond issue basically is when a bond is being first issued. Nothing about it, it has not been trading in the secondary market, it is its first time. For a reopened bond, a bond was issued on February. CBK goes back and says, let's reopen this bond and be able to raise more money from it. That's our bond reopening. For a tap sale, this is the immediate offering of a bond that has been issued previously. Though for a tap sale, everything is under the conditions that we are given when this bond was first auctioned. So we are not bidding for interest rate. We are taking the interest rate that was offered. We are taking the minimum amounts and everything. We are not changing the terms of the bond. Let's look at the new issue bond. The individual, we have talked about the new issue bond.
Wakamiru,
Yes.
Let's take a short break.
That's okay.
Yeah. So is there some noise from your background? We ask the participants to bear with you.
Yeah.
Okay, so guys, please bear with Wakamiru. I think we can try to hear. Yeah, apart from just some slight noise, I think we are getting, plus the slides are pretty clear. I hope we are together up to that point. If we are not, you can put your questions in the comments. Some of them I think have been answered when you are talking. But if there's something that is already mentioned that you had asked that you feel was not tackled, feel free to type in the comments, or if you need a clarification. Okay, thanks.
Thank you. So I was talking about the type of bonds that we can get in the primary market. And the first type of bond was the new bond issue. These are first issue bonds, and nothing much about it, because much of the issue about bonds is when we have an open bond or a tap sale concerning its pricing, and which we'll be looking at. The second category of bonds that we can get in the primary market is which we call reopened bonds. And bond reopening is the auctioning of previously issued bonds. And I have always championed for reopened bonds as a way of getting a short-term bond. Let's dig into that. So this bond, which was issued on February, there are a couple of months or a couple of days, we calculate in days, there are a couple of days which have passed since it was first issued. So if the bond was 10 years, you will get a bond at 9.8, 9.7 years towards its maturity. So you can imagine if you are getting an open bond from 2018 or 2019, you'll get it was a 15-year bond, but there are 7 years or 8-year bonds remaining to its maturity. So it is a great way of getting a short-term bond if you go for a reopened bond. And the bidding for this bond can either be competitive or non-competitive. And I'll be explaining in detail what competitive and non-competitive bidding and how you can participate in both. The third type of bond is a tap sale, which we have said is an immediate reopening of an a previously issued bond that did not raise the targeted amount. And the bidding is strictly non-competitive, and it is issued at the current market price, though the term, every other term remains as it is. And we have had several questions about the market price of bonds, and we are heading to that. I'll be able to explain. So if you are going for a tap sale and the current market price of the bond is 102 shillings or 103 shillings, or if you go for an open bond and you find the price of the bond is 104 shillings, you will be asked to pay for more. If you had put your face value as 100,000, you might find a text message telling you the offer payment is 104,000. And people have been asking, why do I have to pay extra for a reopened bond or a tap sale? And this also happens in the secondary market. You will be paying more for a bond. And this depends on what we call accrued interest. And this is a concept that so many people have been struggling to understand. And what happens is, this bond that was issued on February this year is already trading in the secondary market. There are people who went initially to it, and they have been holding it for a couple of months now, and you are getting this bond later, a couple of months later. And a bond in the secondary markets has so many factors affecting it. And we talk about the period to maturity, the period to the next interest payment date, the yield to maturity. These all factors combined will result in different prices for a bond. As CBK offers in the open bonds on tap sales, they are targeting that the successful offer price or the yield should reflect the prevailing secondary market yield. I have explained this in a very simple language to say, if you bought a cow that is not served, you'll get it at a cheaper price. But if you got a cow that is served and it is 6 months to its due date, you will pay more. As we go towards its due date, you will find yourself having to pay even extra. So you're getting a bond 3 months later. So you will wait 3 months to earn interest. There have been accrued interest, and this is what you are paying for because of getting that bond later. I hope that has been clear, and if it is not clear, let's find someone ask a question and be able to get back to it. So the accrued interest, and we are saying it adds up each day between coupon payment dates. So the next coupon payment date is September or November this year. As we approach the next coupon payment date, the bond price will continue increasing. For the open bonds and tap sales, since their initial offer, there have been days that have passed, and these bonds have been accruing interest. The price for these bonds and tap sales is intended to factor in this accrued interest. That is why you find yourself having to pay 104 or 106 shillings. When the opening date of the open bond falls on the interest payment date, you can actually pay for your bond at a clean price which doesn't factor in the accrued interest. But if you are getting the open bonds on any other date other than the interest payment date, you will get that bond at that price, and that price is the price of the bond and the accrued interest fact. So let's give a difference between data price and clean price at this juncture. And clean price and data price will only differ in that clean price is the price of the bond which doesn't have the accrued interest, well, yes, the data price has accrued interest factor into it. And the clean price, this is the quoted percentage of the face value, and the fluctuation of the clean price is only about the bond market condition, the interest rates and everything, the inflation rates. And it is usually the quoted price of bond. Well, yeah, and you can use that to compare different bonds in terms of their price. The data price, which we have said is clean price plus interest accrued. And this price changes every day as the interest accrues. Now this represents the true value, the true market value of a bond, and it is used to determine the total cost of a bond on what you have to pay. Yield to maturity, another concept that has not been understood. We are just explaining it for the purpose of people understanding. And whatever you will earn since after taking your bond, if you hold it to maturity, having factored in the price you paid at, is what we call yield to maturity. So we are taking all the coupons and we are calculating them and comparing with what you had put in initially, and this rate of return is what we call the yield to maturity. And where your yield to maturity is equal to the coupon rate, a bond trades at par, that is at 100 shillings. Where the yield to maturity is more than the coupon rate, a bond will trade below par, that is at a discount. And where the yield to maturity is less than the coupon rate, the bond trades above par, and that is at a premium. We can let that sink in.
Yeah, as it sinks in, I hope you guys are okay. If you're not okay with the terms, feel free to ask.
Yeah. So having talked about a new issue board, early open board, and up sale, and the factors that will cause the price to be different for the open board and adapt sale. And this is where we have said about the accrued interest, and we have also explained the data price. We can now go direct to this question. How do I invest in the primary market? Most people don't want to go to the secondary market. They don't want to deal with brokers out of a phobia. I hope we can be able to remove that phobia. Yes.
Let me interrupt. There's someone who's asking how to calculate the YTM.
Okay. In subsequent section, we have that.
Okay.
Yes. So as I was saying, most people don't want to go through a broker. Most people don't want to go through an agent, a placing agent. They want to deal directly with the CBK. And this is how you can invest directly in the primary market. You have to open a CDS account so that you're eligible to apply. And for you to be able to open a CDS account, you should be having an account with a Kenyan bank. You also be able to have your identification document, that is an ID or passport, and also your copy of KRA PIN certificate. For Kenyans living here and in diaspora, they can invest in Treasury Bonds and Treasury Bills directly with the CBK. Now, for non-Kenyans who want to invest in Treasury Bonds, they can actually invest as they now have to go to a bank and be the bank investors a nominee, a nominee account with a commercial bank. So in simple words, without the many words, is where you have your bank account and identification document and a KRA PIN, you have to visit the nearest central bank branch near you. There's one in Nairobi, the headquarters, there's another one in Nyeri, there's another one in Nakuru, there's another one in Kisumu. There are a couple of them. So visit the central bank branch which is near you. So if you're outside Nairobi, you can actually consider visiting. If you're in Nyeri, visit the Nyeri branch. If you're in Nakuru, if you're in Kisumu, if you're in Mombasa. At the central bank, ask that you want to open a CDS account, ask for a mandate card. You will fill in your details in the mandate card, which is a form, and be able to show as a sample of a mandate card. And you will take your documents, the mandate card, the identification document, the KRA PIN, and the passport photo. You will take that to your banker, where you bank. If you are with Equity, go to Equity. If you are with the Standard, go to Standard. And this is where you will ask a customer relations officer that you want your documents certified, so that you can take them back to CBK. So the certification, your bank branch is doing, your bank, you don't have necessarily to go to your branch. The certification that your bank is doing is, they are saying that you hold that account with them, the bank account you have given, you have hold it with them, and they also saying that this is our customer. After the documents are certified, you return them to CBK and wait for some time. You don't have to wait, that should be 2 weeks, it should not take long, and then you will receive a text message on the phone number that you have indicated in the forms. Yes, the number that you have indicated in the forms will be used to register for the Treasury Mobile Direct. That is a mobile application which we'll be explaining next, which is used now in applying for bonds and bills. So it is simple. Your ID, your KRA PIN, your passport, and now you hold a bank with a Kenyan bank account with a Kenyan bank, and go to CBK, get a mandate card, fill the details of that are required in the mandate card, take your documents to your bank, have them certified, go back to CBK and wait. After your CDS account is ready, now we want to look at how you can invest. How do you apply for your bonds or a treasury bill for that matter? And we are saying, for Kenyans living here in Kenya, there is a mobile application which we call TMD. It is a short form for Treasury Mobile Direct. And this system is accessed through a USSD code, which is *866#. And let's put this clear that you can only access the TMD during work hours. From Monday to Friday, you can't access it over the weekend. You can't access it at night. It is during work hours, Monday to Friday. And when we'll be showing you how to apply, I have the slides ready. And now, when you are everything, CDS account is ready, Treasury Mobile account, Treasury Mobile Direct is ready. You have activated it and registered your PIN. Now, we need to identify a bond that we can invest in. And bonds are on offer every month. We have said that. And what CBK gives is what we call a prospectus. That's an invitation to invest with them. Treasury bills are on offer every week. And you actually don't have to wait for a prospectus for treasury bills. Just go direct and invest and apply. They'll be readily available there. But for bond, you need to check the terms and conditions and everything. So we'll be looking at a sample prospectus and be able to know what goes where and everything. We have links. So if you want to see more bills on offer, you can follow that link on that document. I will be sharing the presentation. I also bonds, the prospectus that are on offer, you can be able to follow and check the central bank website and see the bonds that are on offer. So how do you apply? So you have already placed the *866# on your mobile phone on the number that you use, that you registered when you're opening your CDS account. And you'll be prompted to input a PIN for your security. Now you are logged into TMD, and the home screen is where we have welcome to CBK mobile service. You can inquire balance. You can, number two, the option is option bids. You can also show bills and board details. There is my account rollover and exit. So when you're applying for your desired security, you'll be going for option 2. That is option bids. This will show you the bills and bonds that are on offer. So you choose option 2, option bids, and send. And then after you have chosen auction bids, you'll have to choose the security type. Do you want to invest in a treasury bid, the short-term investment, or do you want to go for treasury bonds, the long term? So you'll choose respectively whether it is a bill or a bond. You'll choose the option and send. Next is where we'll have the treasury bills. If you choose treasury bills that are on offer, they will be listed there. And this is where you'll find a 91 T-bill, 182 days T-bill, and a 364 T-bill. And you will be able to choose one of the options according to your needs. If you want to invest for 3 months, you can be able to choose one. If you are going for treasury bonds, the treasury bonds on offer that month will be listed there. And now you can be able to pick the bond that you want to invest. Last month, this month, last month, we had 3 bonds on offer. An IFBB will be listed there. There is a fixed coupon rate for 10 years, and another one for the number of years. They will show you how they are initialized so that you're able to choose as we look at the prospectus of a bond. After you have chosen your specific security that you are investing for, you'll be asked for the amount you want to invest. This is your face value. This is what you will earn interest on. So you'll just be input the amount, that's 100 shillings, 100,000 shillings, 200 shillings. We have said minimum for treasury bills is 100. Treasury bond, ordinary bond, 50,000. Treasury bond, infrastructure bond, the minimum amount that you can invest is 100. So, and everything is also, any additional amount is in multiples of 50. So if we are doing for treasury bond and we want to invest 150, it should be 150, 200, 250, multiples of 50. I hope that is can be understood. Now, we had talked about competitive and uncompetitive bidding. And I want to say this because the next step after you have chosen your bill and you have input to the amount you want to invest is you now have to say your interest rate. If you don't have experience in bidding for bonds and treasury bills, just go for the average interest rate, which we say is non-competitive bidding. But if you have experience where you'll be asked for your interest rate, just go direct and say your desired rate of return. So competitive bidding, you're saying what you would desire to earn. Let's say I'm going for a bond 10 years. I'll ask for 12% or 12.5. But for someone else who doesn't have experience in bidding, they will go for the average. And what you are saying is, I will take the average interest rate that is agreed upon after the auction. So basically, after we have submitted our applications, we have asked for what we want to earn. The auction committee, which is a function of central bank, meets and they get cut-off points. We won't exceed this point and we won't go below this point. And the bids that are within the cut-off point, they are accepted. All bids that are within the cut-off point are accepted. And then they get the weighted average rate for accepted bids. And this is the rate that is applied to all non-competitive bidding. Most of the time, I always say, this rate, you won't get much from it. You won't find people getting 13.5 and you had tried to bid for 15%. You'll be outside the cutoff point. So for you to be safe, because the bonds which are not within the cutoff point, they are rejected. So for you to be safe, just go for the average interest rate. Now, after you submitted your bid, everything, you receive your auction results. You will receive this through a text message to the mobile number that you had registered when you were opening your CDS account. Now, there's a sample message for someone who had applied for the infrastructure bond 1/2022/018. And they are being told that the application is successful. The offer payment, not two things. The offer payment, it is not always that your face value will be the offer payment. For a new issue bond, you can get your offer payment being the face value. Whatever you had said, 100 or 1 million, you will get that as the offer payment. But when you go for reopen bonds and tap sales, you'll always find the offer payment differing with the face value. So whatever is the amount of the offer payment, that is what you should pay for. Nothing much, nothing less. Then note your rate, the rate that you were given. If you had gone for competitive bidding, your rate will be put there. If you had gone for non-competitive bidding, you'll be given the average rate. And then there's what also I want you to note is the reference. Here we have 8674.86. Can you note that number down after you have received? Now, if you're applying, if you receive that the auction results, that also is very important because we'll be using that reference number when we are paying for our allocated bonds. And then there's the date. Also be cautious about the date because if the time lapse, you should pay by 13th of June, that is by 2 p.m. If time lapse you won't be able to pay for your allocated bonds. Be cautious. Central Bank a while back, we are blacklisting investors who default paying on time. Now you are being given 3 chances. Or if you default 3 times, if you are not paid on time for your allocated bonds, you will be blacklisted. That is well explained. And now we go next to, most people have been struggling with this. How do you pay for your allocated bonds? And I will be showing you how to go through payment through an RTGS. You actually don't have to go. Let me power my laptop. You actually don't have to go to the bank. You could just our branches by going online. The option you have, you can pay cash. You can pay via banker's check with your payee is Central Bank of Kenya, or you can do an RTGS. An RTGS at the bank branch or via an internet banking platform. And I love doing it through the internet banking platform, and I'll be showing you how to do it. So if you go to the bank, kindly, as you fill in the RTGS form, where you asked to fill in the investor, the beneficiary name, that should be a beneficiary. Kindly write the name of the investor, be it you as an individual or the group, the investment group, be it a chama, be it a school, or be it a company under which you open the CDS account, the name you open the CDS account, that should be the beneficiary name. I found issues with people calling me at the bank, and a banker is asking, why did you put your beneficiary name, your name here as a beneficiary name? Just tell them that that is how it is supposed to be done. The beneficiary bank should be Central Bank of Kenya. If the form has an option for you filling the branch, just do HQ, that is a headquarter. And the beneficiary account number is your virtual account number. Where we were accessing the TMD, we had an option for viewing account details. Just choose that and you'll be sent a message telling you your portfolio and your virtual account number. The virtual account number is what we are to indicate as the beneficiary account number. So let's do an RTGS tutorial. So many people have been struggling with this, and I found it important to do this. So when you have logged into your internet banking platform, whether you are with Cooperative or Equity or wherever, it might not be the same, but no much changes. If you see this, you should be able to follow with your bank on your internet banking platform. So I just logged in, and those are my details there. And at the dashboard, I have chosen local transfers. I have indicated that. I've gone to dashboard and I've chosen local transfer. Now, if you don't have, if you have not added CBK as a beneficiary, that account as a beneficiary, you'll have to start by adding them, adding a beneficiary. Then you'll be asked for details of the beneficiary, and we are saying the beneficiary type is local other bank beneficiary. My bank has an option to bank, the Stanchart to Stanchart accounts. This is other bank beneficiary, but still local. And I had an option, either mobile number or accounts, and I chose accounts. Now the beneficiary name, I said this is the investor name. This is Wakamiru. For a chama which has a CDS account, and it is XYZ chama, that is what the beneficiary name will be. And your beneficiary account number. We have already agreed that whatever we are inputting here is the virtual account number. So you'll be asked the currency, which is the Kenya shilling, and beneficiary country, which is Kenya. Beneficiary address, just go for Nairobi, Kenya. That should be pretty easy to do, I hope, after this presentation. So we'll go to, there's also you'll be asked to search the SWIFT code. Then you can search by the bank name or by a code. If you have a code, most banks offer a platform to search the code, or you can get the code here and type it there and search through the SWIFT code. I just searched the bank via the bank name. I just chose the drop-down list and chose the Central Bank of Kenya, and the bank details is there. I just tick and say next. So you just need to confirm the beneficiary details. They will be listed there. I just highlighted the part of the confirmation, and you'll say you have read and understood, and you confirm. So there we are, making the transfer. We'll be adding a beneficiary. Now we need to make a transfer. Immediately, my bank gives me an option to make a transfer. But had I added a beneficiary, just logging in and saying a local transfer, I'll be asked whether I want to do the transfer to the added beneficiary. I'll be able to choose among the list of beneficiaries that I have added there. So when I've chosen make the transfer, I'll also be able to choose, is it an transfer on RTGS or PesaLink or set a standing order? Choose a transfer. I hope your bank has an easier way of doing this. Now you are choosing the account to transfer from. You might find yourself with 2 accounts. So you choose the account which is sufficiently funded, and you tick the transfer type, which is the RTGS, and then I'll say the beneficiary details. So the account name is Wakamiru, the investor, and the virtual account number is there. And then there is the amount, there is the account, whether it is in currency, in shillings or whatever. Those details are there, the ones we have just added. What we are supposed to add next there is the amount that we are transferring. Kindly remember, I have said that the message that you receive as auction results, this is your guide on the amount you are supposed to send. So if you have been asked to send 105,000, kindly pay that. This, I've said, this might differ from the face value, and especially if you're getting a bond, an open bond or a tax sale that is already trading at the NSE. After inputting the amount that we are to transfer, we are also to input, we have been asked to the transfer reference, or you provide the purpose for transfer. You'll find an RTGS at the bank asking you purpose for funds and everything. So here you are to quote, in simple words, what are you paying for? It is an infrastructure bond 2021-2022-018. And then kindly reference this message, this number came with the message that we received at the auction results. Just input that. And then the transfer date. You can actually choose the current date and say next. After this, you are supposed to confirm and agree that you agree with the terms and conditions. Then you'll be asked for your security protocols, that is a password and everything. And you are done. And you are done with the RTGS transfer. I hope this will benefit people who are not able to visit the bank branch to effect an RTGS. They can actually go online. Now you have come this far, and we have said you are receiving interest twice a month. That is for bonds. Treasury Bills is easy. Pay some amount at the beginning, receive that amount, and the interest rate at the end, that is at a discount. But for bonds, you need to plan for what you'll be receiving. And calculating your returns for a bond, this is where we create what we call a coupon schedule. When do you expect to be paid? In the prospectus, the CBK has given you the interest payment dates, and this is what guides us to be able to generate a coupon schedule. So This is helpful for you to know if you have a bill to pay, know when you expect funds. If you're planning for this money, just know when you expect this money so that you plan for it. And the coupon schedule has the specific security. It tells you the specific security and the face value, how much are you investing, the tax, the coupon rate, what interest are you earning, and the maturity date, when do you expect your funds back. And we have already said that a bond will pay interest every 6 months. This bond, the value date was on May. So you are finding yourself every May and November, you are receiving some coupons or what we call interest. The coupons, it is half of what you should expect in a year. So 6 months, you receive half. The other 6 months, you receive half. For people who want to do compounding, this is very beneficial because after that, let's say on 14th November, you receive an amount, or if you had put a big amount, let's say $1 million, and you have received some 60,000 or whatever amount, you can be able now to plan, let's get this money from my bank to a money market fund or get another bond from central bank. This is beneficial. When you apply for a bond, get this coupon schedule, calculate this so that it helps you in that. Now you should, for people who have financial consultants, they should be able to help them with this. I'll know friends like myself who can help you with that, calculating this coupon schedule. I'll show you how to do it so that you can always be doing it. In subsequent sessions, God willing, we can try develop this tool and we can give it for people to be able to utilize it. So this bond is a 10-year bond. You can already see that from the bond, the seal of the bond. That is a 10-year bond. And the coupons, there are 20 coupons, 20 of them. So you'll have under the coupon totals will add up to 121,410. And the coupon from your plus your principal, that will be 221. Depends on how you are looking at it, whether it is much or more. We'll be able to make those comparisons at the end of this session. This is it. Let's talk about the interpretation of a prospectus. So you just found such a document and you don't know even how to go about it. You can't tell what is where. So it is simple. They are saying it is a prospectus for 2 reopened bonds. Actually, they're bonds that were being auctioned, or that are being auctioned this month. And we have 2 bonds. The both initially they were 15 years. One was issued in 2013. The other one was issued in 2018. And CBK is looking to raise, the total value they are looking forward to raise is 40 billion. And let's dig into some of the terms here. And we have already said the issuer is the Republic of Kenya. Bonds are backed by the full faith of the government of Kenya. And the amount that they want to raise is 40 billion. The purpose of the funds, that is budgetary support. The tenure, we have the specific bond, that is FXD2 2013, 15 years. It was a 15-year bond, but it has 5.8 years remaining. This is what I was saying, that you can actually get a short-term bond if you go for reopen bonds. For someone who doesn't want to commit their funds for 15 years, they can actually go for can get a short-term bond by going for a reopen bond. The second bond is the FXD2 2018-2015, which has 13.3 years remaining. And now you'll be given the coupon rate. These bonds were auctioned earlier, so the coupon rate is already agreed. And the period of sale, that will be from 28th of June, that was last month, up to 19th of July. this month. That is the period of sale. So submit your applications between 28th of June and 19th of July. And the value date will be 25th of July, 2022. This is when now we'll start calculating. From 25th of July, 6 months, you will receive interest. This is when your bond will start earning interest. 6 months and a coupon, 6 months and a coupon. And also the redemption date will happen after the agreed date. If it is 5.8 years, from 25th July, you're expecting your principal back after that period. You add it up to the value date. Price, you can get a discount on premium or a price at par. And this is where someone asks about the yield to maturity. The yield to maturity helps calculate these prices. And we are saying that if the yield to maturity, that when a bond is being offered or reopened, is equal to the coupon rate, you will find that bond being issued at par at 100 shillings. And to be able to help one on that, we have a schedule here of the yield to maturity, and for the two bonds, that is for FXD to 2013-015 and FXD to 2018-015 for 15 years. So when we are calculating the price, of our bond, we'll be able to, I hope someone can see the yield to maturity at 12.750. And going by what we have already said, for that is for the FXD to 2018-015. The yield to maturity that is quoted there is the 12.75, and the clean price is 99.95. So we are saying that where the yield to maturity is less, let me pinch this back to where it was, where that is 12.7 is less, that was 12.750, which is less than the coupon rate, which is 12.750, less or more, 12.75, and so we are getting a little discount of some few, but when you put this figure into millions, this translates into a higher amount. We'll find that the amount in question is higher, and that should explain the discounted premium. So you'll get a discount. You can pay less than the face value that is at a discount price. If you get higher than the face value you are paying at premium. Kindly note, for the discount, you'll be taxed. Tax will be affected there. We'll be able to look at some calculation of the same. Then we have the minimum amount that one can invest. We are talking about, these are ordinary bonds. This is 50, and any additional amount is in multiples of 50. So as we are calculating, as we are tabulating our coupon schedule, we are relying on the interest payment dates. CBK will always give the interest payment dates of the bonds that they have in offer. So you go in for the FXD to 2013, that is a 15-year bond which has 5.8 years remaining, and the next interest payment date is on 17th of September, that is 2022. So we are in July. You are just waiting a couple of months to your next interest payment date. That should be less time to wait. On top of the price, we have already said we'll factor in the accumulated interest. So you will pay more for this bond because there are a couple of days that have passed since the last interest payment date. After the interest payment dates which are tabulated there, now we have the taxation. Discount or interest on these bonds is subject to withholding tax at a rate of 10% for the two bonds. These bonds are longer than 10 years. They are 15-year bonds. And the tax, despite that they are 5.8 years and 11.3 years remaining on each, they are long-term bonds, and they are bonds that are longer than 15 years, and the tax rate will be at 10%. So the redemption date, when do you expect your money back? That should be when your bond matures. It's given there. How long do you have to wait? But they should be able to guide you. And then we have issuing and paying agent. So the issuer is Central Bank of Kenya. And you can apply for your bonds via commercial banks or non-bank financial institutions, let's say investment bankers. They are licensed stockbrokers and licensed investment advisors. So the issuance method, there is a multi-price bid auction. We are placing different bids, and also will, according to the YTM, will be receiving a different price. So if you are going for non-competitive bidding, if you don't want to ask for a rate of return, maximum 20 million per CDS account per tenure. You can't go for non-competitive bidding above 20 million. The bid closure, you should submit your bonds if it is through TMD or the forms. You should submit by Tuesday, 19th of July. The time is given there. Please note the date. And then the auction date and when we'll be expecting for results. Auction happened on 20th, and we expect our results on 21. On 20th in the evening, people will be always receiving the auction results. Now, if you're outside the country and you had placed a bid and you want to know how what to pay, kindly send an email to CBK. I'll be giving that email asking for a bidder's report. Kindly don't get late. Just make sure you know when the auction happens, and then you can send an email and ask for a bidder's report. There's the auction results now on email, and you can actually explain if you're outside the country or something. Now the results, you are to obtain the details of amount payable. It is not the face value. You are to obtain what is payable for your successful bids on 21st. So expect a text message. If the text message doesn't come and you had bidded, kindly make sure you send an email or call to get your bidder's report. But for people in Kenya, the phone that they use to register is working. They should be able to get the results through the Treasury Mobile Direct. So if you default, if you don't pay on time, you'll be suspended. Let us say that you are given 3 chances. And then the other issue is the commission. This is for the placing agent. If you are placing agent, you will earn a commission at a rate of 0.15% of the actual sales. You will be taxed for it. So if one wants to be investment advisor and get a license, and you can always earn a commission by helping people invest or using the people investing through you as a placing agent. Kindly let me make this point blank that don't give anyone your money. No one is collecting money on behalf of central bank. Any money is paid to central bank's account. Now, rediscounting. We'll talk about liquidating your investment. If you want out before time, if you want to check out, it is 5.8 years remaining. 2 years down the line, you want your money back. How do you get your money back? And the first option is central bank can rediscount your bonds, though it is as a last resort. And actually, it comes at a cost. That is 3% above the prevailing market yield. This is to deter people from checking out through CBK. There is another option of checking out. We have said that central bank will discount your bond as a last resort. So there is an option where you can go to the Nairobi Securities Exchange, and if you go sell your bond to the Nairobi Securities Exchange and your bond is not bought, you'll need a written confirmation from your agent or broker to say that your bond was not bought, so that central bank can rediscount your bond. So the other issue of the liquidity is for banks. They are saying if a bank applies for bonds, they are saying the bonds qualify for statutory liquidity ratio. I don't know whether we have a banker in the house, but they know this thing. And then the listing of the bonds, and these bonds are already listed in the Nairobi Securities Exchange. Had it been a new offer, a new issue, they will be saying the date when the bond starts trading in the Nairobi Securities Exchange. The classification, the benchmark boards, that is not important. And then we go to the eligibility. Only investors with active CDS accounts. And reopening, the boards can be reopened in the future. Secondary trading will commence on 26th of July 2022. They are already trading. So if you get these, again, there will be whatever you get from the primary market, the reopened bond from the primary market, that should trade that from Tuesday 26th. CBK, you can accept your bonds in full, or in part, or reject in full without actually giving any reason for rejecting your bond. So you'll find that most people, if you had asked for 2 million, you might find that they have given you 1 million. So they reserve the right, though not at this economy, they are looking for money. So when we are talking of interpretation of prospectus, now due to time is running out, now this is a fixed coupon bond. We had classified these bonds two ways. There's a fixed coupon bond, and there is an infrastructure bond. The difference between the two will be, number one, at the taxation of the bonds. You'll find these bonds are tax exempt. The other difference will be the minimum amount that one can invest. For an infrastructure bond, you'll find that figure is 100,000. Then redemption dates. Someone get this, for any amount less than 2 million, if you are going for an infrastructure bond, it will be returned halfway the tenure of the bond. So if your bond is maturing in, it is a 10-year bond maturing in 2032, 5 years, you get your money back. And now you stop continuing earning interest now that you have your principal back. But for any amounts above 2 million, halfway through the bond, you will receive 50%. And at the end of, you will receive 50%. So if you had invested, let's say 5 million, you will receive 2.5 million halfway through the bond. So you'll be earning interest on 5 million for the 5 million. Halfway through the bond, you will receive back principal, that is 2.5. And then as from 5 years to 10, you will continue earning interest now at what is remaining, the 2.5. Let me clarify that. So it is, let's say an example, 10 year, you had invested 5 million. That is above 2 million. So the redemption structure is this way: 50% halfway, but though they will have indicated the year, 50% of the principal halfway, you receive it back and continue earning interest at the remaining half, at the remaining 2.5 million. And then this lands up to the end on the redemption date or the maturity date of the bond. So that is what I have put there. I said for infrastructure bond prospect, just note that number one, the difference is that it will be tax exempt, and the redemption structure for any amounts less than 2 million, you will receive the amount in full. So let's talk about liquidating your bonds. And one will be wondering, how do I get my money back before maturity? You have two options: going to central bank and get your bond rediscounted, though that is as a last resort. What central bank is doing, and all other players in the central market, in the capital markets, they are trying to do is getting our securities exchange market as active as possible. So the first option for you to liquidate your bond should be through the Nairobi Securities Exchange. I'll explain this in brief. How you can go through the Nairobi Securities Exchange. If you are going to central bank, we have said that you need a written confirmation that your bond was not purchased in the secondary market, that is the Securities Exchange. So liquidating your bonds through the NSE. So we are saying, we had already started by saying these debt instruments, they are tradable, they are financial products. You can trade them, they are tradable in the Nairobi Securities Exchange. So I had a bond and I can transfer that ownership to someone else. They give me back my money and I'm out, and they continue earning interest on whatever they have purchased. Then after a year or two, they want to sell, they can also transfer that ownership to someone else. And actually this was why we had to go the electronic way, so that they are transferable easily. Why would one want to sell before maturity? For personal reasons. There are other people who want to get their fund to invest in other opportunities. There are people who will also want to sell their bonds because they are board traders. There's a board investor who gets a bond and they stay with the bond for the full tenure, and they are also board investors who will bond traders who will want to get a treasury bond and then they sell after a couple of years or a couple of months. So how easy is it to sell your bonds in the Nairobi Securities Exchange? So there is a brief history there. We are saying that 2019, NSE reduced the trading and settlement period for government bonds, and they enhanced the trading system. And also now Central Bank is also bringing in a system that will also make the trading of bonds easier. So what happened is we reduced the time that it takes for settlement to happen, and it was in the financial sector. We talked about day trading, where bonds you can change hands in a day. Though don't expect to get your funds in a day. Someone will take the new ownership of your bonds and they ask to pay. We will wait maybe 3 days to get your funds. Now, if you want to opt out before maturity, talk to a central depository agent, that is a CDA, or a stockbroker. They can be able to help you with that. Majority of our investment banks, they are CDAs, they are agents. So if you're not okay going through a stockbroker, you can actually go through there are a couple of them. You can check the CMA website and see on the CDSC website and see the approved agents. So I'll talk in brief and I'll be able to tell you how easy it is to sell your bond in the NSE. And also actually we'll look at how is that counter in the NSE. How is the bond counter? Is it active or not active? And I had prepared something. This is for last year, July, August, and September. And we had bonds worth 95 billion trading in July. And we look in August. We look August we had 87, and September we had 118. So it is so easy to sell your bond at the NLC. It is a very active counter. So if you want to check out, just get a hold of an agent and ask them to initiate that purchase. So here is a pricing. if you want, someone wants to buy a bond from the NSE, this is what you should receive from a broker. They'll be able to calculate this for you. And they will tell you that you will ask for a bond. You'll be given option for bonds that you want to invest in. And the bond will be listed there, the coupon rate, the issue date, all the features of the bond will be listed there. And now the face value. And they also say, very important to note, the period to final redemption, that is 17.66 years. This should help you to plan. Then the face value that you're investing in, the face value, the amount you want to invest, that's 100,000. The yield to maturity, we had that is 11.6. And we said these are returns if you hold this. That is what your returns will be if you hold these bonds to maturity. And this is calculated annually. The days to accrued interest, that is 123. Since the last interest payment date, 123 days have passed. The interest accrued is 4,208. You'll get that calculation if you want to go purchase a bond from the secondary market. People have been asking the transaction charges when you go to the secondary market, and there is a brokerage commission, which is a 0.024%. There's the CMA, there are minimum of 500. There is a CMA and a CCDSC levies, that is at 0.011%. That they calculated, that is 12 shillings. There's a VAT, and then the total charges. Then we'll be given the net amount payable and the net amount receivable. So whoever is selling this bond, they are to receive 110, and whoever is to pay 111. So note the that applies here. That's 111 shillings. The accrued interest in terms of shillings is 4 shillings. So the clean price is 106.7996. Let's talk about default risk. Someone was asking, can the government default? Can the government fail to pay? And we always consider Treasury bills and bonds as risk-free because they are backed by the full faith of the Kenyan government. And it is the economy that would be at stake if the government was to default. Now, just imagine the number of institutional investors who have invested billions of money, which is not their own money, it's clients' money in government bills and bonds. If a default happened, that would be a crisis. And here we have collective investment schemes. Most people will save through a money market fund. A money market fund will take your money and invest either in treasury bills or fixed deposit accounts in banks. And they allocate a large sum of money in the government securities. We also have banks which have invested billions of money, pension schemes, insurance companies, circles. So if you think of a default, think what would happen if the government refused to, or defaulted on paying the money owed to these institutional investors. And I want to take an example and talk about the equity bank asset allocation ratio. So they just did their financial report a couple of months or so ago. And the loan and advances to customers, that was 47% of total assets, while year's investment in government securities was 26% of total assets. That's considerable amount of money. So if you are worried about a default risk, now imagine what would happen if someone like Equity Bank wants to lose their money that they have invested with a central bank. And the reason why I have also analyzed the interest income is to show you where banks are earning money from investors' deposits. Interest from investment in government securities, they have earned 35% of their total interest income. That's considerable. That's a huge earning. So what we are advising individual investors and chamas is get a share of this, of the interest income that is being paid. Get a share of that by investing directly with the CBK. There's the financial statement of Equity Bank. Someone can go through, the presentation will be ready. And I want to also talk, I said, what is at stake if the government was to default. Here is a bank called Habibi Bank, which has a branch in Kenya, which is following on. It has its headquarters in Switzerland. For the financial statement I've analyzed. That was last year's financial statement, which I've analyzed. So this is a foreign bank, which has a branch here, and they have faith in our securities, our government securities, and they have allocated 25% of the total assets, 67% of the total assets in government securities. And they have gone ahead to earn 79% of the interest income from government security. So when I say what is at stake, these are foreign investors who are at stake here. They are Switzerland who have shares in the in Habib Bank, the owner of Habib Bank here in Kenya, and the government will always want to protect the interest of foreign investors and also the interest of our local investors. So they can't afford to default. Let me put that. Let's go to a Q&A. And I saw someone ask about the advantages and disadvantages. Now the advantages, you're earning above average interest. The interest, Treasury bonds will always pay a higher rate in comparison to a fixed deposit account or money market funds. The disadvantage is you're committing your money for a long period. And also, another disadvantage is if you want to liquidate your investment, you cannot do it instant as you would go to a bank and withdraw. So you would have to plan for that. This is not money to go for it when you have an emergency, like a medical bill or something. So we have someone also asked about Treasury bonds and the difference between Treasury bonds and Treasury bills. And Treasury bonds, they are long-term. Treasury bills, they are short-term. We have also said you will earn lucrative returns on Treasury bonds now that you are committing your funds for a longer period. The Treasury bills, you're committing your funds for a shorter period and you will earn less returns. So Treasury bonds and money market funds. Now, the Treasury bonds, we're investing directly with the Central Bank of Kenya. For money market fund, these are given by collective investment schemes, or what we call CIS, which are licensed by the Capital Markets Authority. So here is a fund manager who will pool your resources and also find safe investment options to put your fund in. And this is guided by a prospectus. So a money market fund should also be able to show you a prospectus where they are investing your money, so that when you are dealing with investment, watch your back. It is you who have to watch your back to ensure you are safe. Now, Treasury bonds, fixed deposit accounts. The fixed deposit account, find someone saying they are fixing their funds for 1 year and earn an interest rate maybe at 8 or 9 or 8.5. But for Treasury bond, we have seen the interest goes as high as 13, 14. The others which have an interest rate of 12. So you learn more on your Treasury bonds. Treasury bonds and shares, no, the safety of your funds come in. The shares, the performance of the company will affect the price of your shares. But for Treasury bonds, this is fixed. For shares, you'll find yourself, the dividend you are to earn, if you are waiting for dividends, will also be influenced by the performance of the company whose shares you got. But for Treasury bills, we have said that's fixed income. The other question is, what is rollover? And now, imagine you have a bond which is maturing next week. You can use rollover option for your maturing bonds, and you are telling CBK, I don't want my money back. I don't want my principal back. I actually want to roll over. I want to pick another security. That is what rollover means. So a maturing bond or bill, you can roll over it. Instead of receiving back the principal, you ask CBK to give you another security. The other question we had is also on default risk, and someone was asking, have it ever happened? And I want to refer to a scenario in 2020 when COVID-19 was reported here in Kenya. And the government, where it collects tax, the government through the KRA had given tax cuts to employed people, VAT, as a means of cautioning Kenyans. And they didn't have money to pay back investors who had whose treasury bills. It was a treasury bill which was maturing, and the investors wanted to pay back the money. So the government gave these investors an option of getting an infrastructure bond in place of the money that they were to receive back. So they are getting an infrastructure bond at a good rate, which is tax-free. It was short-term, and this is how near we have ever come to defaulting. Though the government had a mechanism where it gave an option to for a rollover. Let me find another question. Yeah, someone says that the difference between having a CDS account through an agent and directory. And now, we have already said that the two CDS accounts you'll get is a CDS account with CBK or a CDS account with CDSC. So if you are going through a placing agent, it is the CDS account. You will have to have a CDS account with the CBK. That is when you are going for bonds at the primary market. So the only difference is when you are going for a bond in the secondary market, this is when you have to use the CDS account. I hope that is clear. I can get another question. Can someone sell the bond directly to another investor immediately? Directly if he or she has a CDS account? No, your bond is being sold at the Nairobi Securities Exchange, and the people who are the market players in the Nairobi Securities Exchange, it is your brokers or CBAs. So you'll have to go through a CBA or a stockbroker to be able to sell your bond in the Nairobi Securities Exchange. How easy is it to sell a small value bond in the secondary market? That is one which is not in millions or billions. How long will it take? And I want to share my other screen when let me find this screen sharing. And I want to share. So I want to enlarge this. This is our price list for bonds which were traded in the market today. This is a market report for July 14th. This is today. And I want us to answer the question, okay, these are the list of bonds that are due and that have been traded in the market. And I want us to look at the value of bonds which have been traded. So anything that has this was 250. This was 50,000. This was 106. This is 106, 200. That's 220. 150. This is 100, 100. This is 2.3 million. This is 500,000. This is 200,000. So whoever is asking whether we can, how is it easy to sell a small value bond? So I think we are talking about bonds at 100 or 200 or 500 or 750. And They are here. They are listed there. They have been sold. So yes, easy. The other question is,
Wakamiru, there are some people in the diaspora.
yes.
So one is asking, how do I open a CDS account when I'm not in Kenya?
Okay.
And another one is asking if you can access TND when you're roaming.
Okay. Now, for the person who is in diaspora, there are documents that need to be sent. You send your documents. If you're opening a CDS account from diaspora, you need to send your documents to the bank for them to be certified. So you'll have to use a courier service. And also now when you receive back your documents, you send them back to CBK. So that's a lengthy process on it, or how you can go about it. The other way, easier way would be going through the secondary market, because majority of our stockbrokers and CDA allow you to open a CDS account. Whether you can send your documents online, you can send the form, application form online, and they will be able to open the CDS account, and then they can purchase the bonds in the secondary market, which is also a good option. The other question is how you apply for your bonds if you are roaming and you are not able to access the TMD. I want to show you how to go about that. So here I have shared my screen, and it is the manual form for application for Treasury Bills and Bonds. So what you're supposed to do is get this form, download, fill in the details. So your face value. So you have seen the prospectus. You are filling in the details as per the prospectus or the bond that you want to apply. Then you are sending this form to. Let's come here and give the email. You are sending the email directly to CBK, your form. So you download the form, fill in, and send that form to. I get the email. This is contact us, yes. Yeah. Felista, would there be another question as I get the email to share with these people?
Yeah, there's another question about getting a response. So someone had asked, after applying to open the CDS account, do you wait for them to contact you, or do you go there physically after the 7 working days?
You should be able to.
In case you haven't got communication, what does it mean?
Okay, you will receive a text message maybe 2 weeks or 3 weeks after applying. So if that passes without getting communication, now you can check on them and see why your bond has not, your CDS account has not been opened. I want to hide that, and then I can. There's the email that you are to send the form to. If you allow me, download the form, fill in the details, and then send that, scan and send the form to primaryissues@centralbank.go.ke. That should cater for people who are moving outside the country every now and then. And also getting the bond result, you'll also send an email to the same email asking for a bidder's report. Felicitas?
Someone is asking, can a minor with a passport have a CDS account?
No minor accounts. Maybe the guardian opens an account on behalf of the minor.
And in the event of death during the tenure of the bond, what steps do the beneficiaries need to take?
The beneficiary, there is a form. They'll go to CBK and ask for a form for transfer, and they will explain the death or card, blah, blah, their documentation, and then they can be able to transfer the bonds.
Okay, and then can I access TMD if I opened the CDS account through an agent?
No, I would want to see the CDS account that one opened. Because if you have a CDS account, you only have that CDS account, which is which we use to trade shares. That is what we open through agents. That is the custodial agents or stockbrokers. The CDS account that you can access through TMD is the one that you went to central bank, got them a debt card. I have had this issue with people, and I also always ask, send me the form that you were sent to fill in. If the form you filled in had Central Depository Settlement Corporation, just know what you have is a CDS account and not central bank CDS account.
I'm thinking what she means is, who is this? Priska. You can correct if I'm wrong. She bought the bonds through an intermediary, like you know, the way I can go to Equity, KCB, and buy bonds through them.
Yes, sir.
But now I think she wants to access TMD.
Okay, she would have to now open the CDS. Okay, even banks, the CDS, we go to Equity or whichever other bank, and we want to purchase a bond, they will ask us to fill in they also agents, custodial agents, they will ask us to open the CDS account. It is not the CDS account with the central bank. Yes.
Then there's someone who's asking, how safe is it dealing with a broker, especially when one is in the diaspora? How secure is it? And can I follow my investments online when they purchase on my behalf?
Okay, a good question. I must admit that is a good question. And I was to explain this. Thank you for whoever brought that up. And this is what we are saying, that when a bond is sold or purchased, let's say now the individual goes to a broker and they ask the broker to purchase bonds from the secondary market. The bond won't go through the broker from the previous owner to the broker to you. Settlement is happening, the exchange in ownership is happening from the previous owner to you directly. The broker will not even come into contact with your bond. So I vouch for a licensed broker. I vouch for a licensed investment advisor. I vouched for an investment bank. I vouch for our banks, commercial banks who are also placing agents. If you're in the diaspora and you are not able to invest directly, don't waste time. Just go through a commercial bank or go through an investment banker and be able to get a bond from the secondary market.
Okay, there's someone who had asked, was trying to send them, does a CDS account have a dormancy period? Does it expire?
Yeah, your CDS account must be active. Now, when you open your CDS account and you stay for 1 year without having applied for security, be it a bill or a bond, your CDS account will be dormant. And now the process of activating your account, you'll have to fill in the forms as you would be filling in the forms as you are opening a new account. That is the process of activating your CDS account.
Okay, and then someone had asked about if you don't get a confirmation after making RTGS payments, what do you do? I made one and didn't get feedback.
Okay, most people are waiting for feedback from CBK to tell them. Most people are waiting for feedback from CBK to tell them that, your bid, your money has been received successfully, blah, blah, blah. I always tell people, if the transaction does not bounce, if you had 120,000, you paid 100 and you don't receive back, if your account balance maintains to be 20, just know they received, just expect interest. Okay, now we have, you know, it is the government. That's how they work. When they have the money in their pockets, we are done.
Yeah. And then there is someone asking, is the coupon schedule calculator available online?
Let's give that tool. Okay, no one is offering. Okay, I don't know anyone offering that coupon schedule calculator at the moment. But God willing, in our next, if we happen to do another session, we can always come with this tool. We'll work with some members in the group and be able to develop that schedule calculator.
Yeah, I think that's a good challenge.
Yes, of course.
Is there a difference if you get your CDS account through an agent?
There's no difference. So now we have already given that answer, and we have said, if you are not in a position to go to CBK directly, just go through an agent, be it a commercial bank, be it an investment bank, be it a stockbroker.
And then can I open a CDS account with my business name, which is a sole proprietorship?
Yeah, as long as you have a certificate of registration. They actually accept individuals. They accept chamas. Chamas can open a CDS account through the certificate of registration. As long as the chama has a certificate of registration and a KLA PIN certificate, they can actually open a CDS account.
Mm-hmm.
So the business, either a company or a sole proprietorship, can actually open a CDS account as long as those minimum requirements are met. Having a bank account under the name of the investor, be it a chama, be it a company.
Yeah, and then does the certification by your banker have to be exactly at the branch where you opened your account?
No, as long as it is standard in the other branch, it's okay.
Okay, and then Moreidi had asked deduce on computing income less inflation, which is now almost 8%.
Okay, I understand the concern about inflation.
Yeah.
And what we are always asking is, would you rather have a bond paying you 13, factor in that you are losing less, or have that money under your mattress? Okay, the inflation, we can always check the inflation in coming years. I hope everybody understand about the economic situation here and outside the country, which is bringing around the issue of inflation. Like the global fuel prices are going down. We expect an ease in inflation. So now at the moment, inflation is in coming years, the inflation is low. So, but the question is, would you rather have your money in a bank account? The other option has always been going to high risk investments. But here you are rather safe. But I have always told people, if you go for high risk investment, just know you learn more, you can get more above inflation, but you have the risk of losing your money.
True. Cheryl asked, if you open a joint account, a joint CDS account at CBK, can you also have another individual account?
Yes. If I have this chama who we are helping to get a bond, and the members have an account as a chama, and also the members open the CDS account as individuals. We have a husband and wife who have a joint account, and then they have a joint individual account.
Margaret is asking if you can use a circle statement instead of bank statement.
Are we using the bank statement?
If you can use a circle statement, I think when at the initial stage.
I don't know whether she meant a circle account or what. I don't know, because
I think she meant circle account.
They want a bank account with a Kenyan bank.
Okay, and then Martin is asking, could you explain the correlation between interest rates and bond returns? Yes, as well as inflation? I think you've answered the inflation part.
Yes. Now the interest rates, the prevailing interest rates in the market will always influence the bond returns. That is the yield of a bond. And now, let's explain. Let's take this example. I always use whatever has been in the news. Absa Bank a while back gave a notice to the customers who hold fixed deposit accounts. And then we are telling them, kindly note that our interest rates are going higher. You are asking more, we'll pay more. And they were also saying, no, this is to reflect the market conditions. Like inflation is going higher, investors are asking for more. And they're also even revaluing they're also changing the interest rates in bank loans. Now, we understand that a bank will will allocate the investments where they can get more. So if the interest on loans change, we are finding, if it is higher, we are finding banks wanting to give more loans rather than invest in bonds. I hope, I don't know whether I was clear. Maybe fatigue is getting to me. So, okay, let me take two. Let's try this. If the interest rates are higher and the prevailing interest rates are high in the market, and we saw this as central bank increased the bench rate from 7 to 7.5, you will find a bond yield earning more. And when the interest rates go down, we'll also find a bond yield going low. And this is what is happening in the market of a bond, where we have investors looking for where can we get more from our money. And we also want this to be reflected in the market. We want this to be felt in the market.
Where will CBK put my interest? Will it be put in the CDS account or commercial bank account?
No, the commercial bank account that we indicated in the CDS account opening form, this is where you will receive your interest. No, also that is a very good question, because I also want to say that when you have a CDS account and the bank that you had said that you want to be receiving your interest and also the principal when they're paying back your principal after the maturity of the bond, that bank was at whichever bank, be it you have a bank at, I like using my bank StanChart. Now, if you are paying for allocated bonds, you can actually pay from any other bank account. You don't have to have access to that bank account to pay for allocated bonds. So you can have that account as a receiving, the account which will receive your coupons.
And then Samuel is asking, someone advised me to open a CDSC with Ganges Capital. Is it genuine? Can I use it to invest in government securities?
Yes, yes, yes. They are licensed.
And then Sally Becky is asking, can someone upgrade, increase their contributions before the bond matures?
No, whatever amount we put in, that was 100, that is what we are earning, which is fixed. So we are earning interest on that up to the end of the maturity. For people who want, like, I found this now, give to a shout out to one of the admins at 52 Week Saving Challenge. They're asking, they are in a chama. They are raising a couple of thousands every month. And they're asking, if we go in on this board, can we top up? And we are saying, no, you can top up on that board. What you can do is getting another bond. Now what you get is a portfolio. I have an IFB issued in 2018. I have another IFB issued in 2020. I have another IFB. So every other time I get a good offer, I go in with. Now what I have is a portfolio of different bonds, which are paying interest over different times in the year. Now this is leaving me very liquid. I'm receiving money every 2 months or 3 months, depending on my portfolio of bonds.
Murithi is asking whether there's a cost difference between transacting via broker or buying directly from CBK.
If you use, if we are getting bonds from the primary market and we use a placing agent, the placing agent will earn commission from CBK. They won't earn anything from us. If you are getting a bond from the primary market, a stockbroker will earn a commission. A transaction or from you. Let me put that clear.
Am I supposed to be charged for CDS account activation?
No.
Okay, they wrote CDSC. I don't know whether they meant the CDS for central bank or CDSC for shares.
Either of them. Opening free, activation for CBK is free. I don't know the CDS account for CDSC account. You'll find I don't know whether it's got they waived the levies that they were charging. Okay, we have had issues.
No, they didn't implement after there was outcry.
Yes.
So they suspended and said they'll consult further.
Yeah, we have had issues with the management, with the bond.
Yeah. And then Esther is asking, can you present a joint bank account number for an individual CDS account?
No. The account name which you are receiving funds from, or which you'll be receiving these funds, will be under the name of the investor. So it is an individual, all a group, all are joints, opening a CDS account under the name which they have opened the bank account.
Yeah, and then someone is asking, kindly comment on use of bonds as loan collateral.
Yeah, so you can use bonds as loan collateral. Just talk with your banker, they value your bond, and they'll be able to give you. Actually, that is it will be processed at a faster rate. Though what we get is it is called encumbered security. Encumbered security, it means that it has been used as a collateral, and when it is encumbered, it cannot be sold until you have finished paying for the loan.
Mercy is asking, if I invest 1 million and wait till maturity, will I get exactly 1 million back or a different amount based on a new price?
You'll get 1 million back. You're getting your face value. I also will say, if you had invested, if the face value was 1 million and it is an open bond which has a different price, and you paid, let's say, 1 million and 30,000, you will receive back 1 million. The 30,000 which was here, much of it is accrued interest. Now, I hope people understand that when you are paying for accrued interest, you are waiting less. In 2 months, 3 months, you are getting your money back.
Please clarify on redemption of infrastructure bonds less than 2 million.
Yeah, you are receiving your money back halfway through the tenure of the bond. If it was an 18-year bond, we say 9 years, you receive all your money back and you won't continue receiving interest. You have already gotten your principal back, so don't expect any interest on what you have received back. But if you had invested above 2 million, half you receive halfway, and then you continue receiving interest on the remaining half up to the maturity of the bond. Okay,
so the last two allow us guys to close because we could continue forever.
Yes.
So the last two is whether you will send the slides.
Yeah, the slides are.
Someone had asked that, and then.
Yes. We'll do a PDF and then send them.
And then Eunice Kiretai said she appreciates your great wisdom and is curious to know if you conduct classes and what are the charges. This clearly calls for another session. There's too much to learn. Thanks for the opportunity.
Thank you.
Someone is saying you have been giving them free information and they want to pay.
I understand now. Okay, but now I started by saying that I'm doing this session, and the post that I've been making has been guided on my desire to bring financial inclusion closer to people through availing information at zero cost. But along the way, we have had benefactors, people saying, okay, let's pay for your internet bill for a month or something. So along the way, if we find the need for people to join a class, we'll be able to do that. Okay, what we can promise at the moment is We'll do another session, God willing. Maybe we can look delve deeper into secondary trading of bonds. I see people have issues there. And also we look at diaspora investment for people who are investing in diaspora, God willing. And then we can see, as we continue, we'll see. Oh, what I can promise Eunice is when we will make bonds understood by everybody, we'll go to another area which I love, which I told you is securities analysis. And we'll be looking at how can you be safe when you go in for shares? How can you be safe when you're going for mutual funds? We have had issues with 2 or 3 mutual funds. So when we go to those areas, we can actually try and see what we can do.
Okay, thank you so very much, everyone who was able to join.
Yeah.
At some point, the class was actually full, so people are trying to join and they couldn't get in.
Okay.
But they were able to follow on Facebook.
Okay.
Let me put my video on. Yeah, they were able to follow on Facebook. And yeah, so with 52 weeks, we don't want you to say that, oh, I don't know about bonds because I didn't have the money to pay someone to learn about bonds. Yeah. We want the basic financial literacy information to be available to you so that you can have the information to make decisions without giving an excuse that, oh, I didn't have money to pay a financial advisor to tell me about bonds. I didn't have a financial advisor to tell me about how to save money, how to budget. We want to make that information available to you so that it's a life skill, to be honest. So we want that information, the basic information, to be available to you. And of course, there are other courses out there charging, but we are giving you the basic information that can help you make a decision. And many have been able to make a decision using this information. But if you still feel you want to pay, that is still okay. But we want to make it possible for those who feel, I don't have all that money right now, but I need this life skill, I need this basic knowledge to be able to get it. So thank you all for joining us. If you still have questions, we can continue with the conversations in the group, and then we'll have subsequent sessions to cover the other. Yeah, this one was a 101 because there were all sorts of, there were people who don't know what a bond is and that kind of thing. So this was a 101 just to get you to know about bonds, and then we can dig deeper into the other parts at a later date. Someone is asking for your number or contact, Wakamiru.
Okay, someone can get, so if one has somewhere to like, that should be 0758 007979. Can you just send a WhatsApp message or a message? I can schedule for a call. Can you?
You said 0758
00 7979.
7979 075. Oh, someone got it earlier. So send a WhatsApp.
A WhatsApp message or
don't
text
call,
message.
don't SMS. Yeah, send the WhatsApp.
WhatsApp message or a text message.
Yeah.
And then I can say when I can call or they can call back. That would work.
Yeah.
Okay, I hope everybody knows that we are also busy building the economy.
Exactly. You know, people get really upset. You know, they send you messages and they expect you to answer immediately.
Yeah, true.
But yeah, people have a lot going on in their lives. So yeah, be patient with people. You can send the text and they will, Wakamiru will get back to you in case you need more information. So thank you so much, everyone. Let me know what else you need to learn about. Then we can organize a session. This was a very much requested session, and I'm happy that we've managed to have it in this second half of the year. And I hope that you feel empowered now to go and open your CDS account and be ready for the next bond that is coming up, or even to buy Treasury bills. For shares, we've already done a session, so I will tag those in the group. We've done quite a number of sessions on shares. But if they still, so you can watch the basic ones, and then if there's some advanced information you still need, then we can organize for that. And of course, Wakamiru said at a later day we can do a session on securities analysis. I don't know whether you want to include shares in that.
Yeah, of course. Okay, when we talk about securities analysis, you saw when EABL was issuing a bond,
Yes.
People needed to know the feedback or the background of this country, of this company, so that they can invest. So when you are going for shares, you also need the background of this company so that you're able to make the decision to invest. So we will work on that.
Yeah, so at a later day we will do that.
For that,
yeah. So allow me to close this. It's going to 10 and way past bedtime for many people.
Of course.
Time to rest and finish up the day. So thank you all for joining us, and see you next time. Bye-bye.